Market crashes can be scary, but they also present amazing opportunities for smart investors. Instead of panicking, you can take advantage of lower prices and build long-term wealth. In this video, I'll show you how to invest wisely during a market crash. The first rule of investing in a crash: stay calm. History shows that markets always recover over time. Instead of selling in fear, think about long-term growth. A market crash is like a stock market sale. Focus on strong, high-quality companies that have a solid history of growth. Look for undervalued stocks with strong fundamentals. Don't try to time the bottom. Instead, use dollar cost averaging, DCA, invest a fixed amount regularly to reduce risk and take advantage of lower prices. ETFs, spread your risk across multiple companies. This way, even if some stocks struggle, others will balance your portfolio. Always keep some cash available so you can buy more stocks when prices drop further. Having liquidity gives you more control over your investments. Market crashes can be stressful, but they're also great opportunities to buy stocks at a discount and build long-term wealth. Stay calm, invest wisely, and think long-term. Want to start investing smartly? Check out the link in the description and get your welcome bonus. Like this video. Give it a thumbs up and subscribe for more investing tips.